The Reserve Bank Governor Lisicha Kganyago having announced that interest rates have been cut by 25 basis points, taking the repo rate to 7.25%, and that then puts the prime rate, that is the rate at which commercial banks lend to consumers, at 10.75%. So that's great news for consumers, but what else can we learn from this latest decision? Well, we've roped in Liandra de Silva, a specialist economist at Nedbank, and Koketso Mano. She's a senior economist at First National Bank. Thanks very much, ladies, for joining us. Liandra, perhaps I can start with you. I suppose it was no real surprise. It looked as though economists were generally expecting a 25 basis cut. What's your view on the latest decision?
For the most part, market expectations were that there would be a cut during this meeting, but there was also a different portion of, the market that expected the Reserve Bank to hold rates steady, considering that in the past meeting, they highlighted significantly the uncertainty mainly coming from what's happening in the global economy and uncertainty around what the ramifications would be for the rand and thus on domestic inflation. So there were some proponents who are expecting interest rates to stay steady.
Koketso, it's interesting that even though they took this decision to cut interest rates, they still didn't discount possible problems in terms of the global economy. They downwardly revised global growth to 2.5% from 3.1% before. And also they downwardly revised our economic growth here in South Africa to 1.2%. That's about 0.2 percentage points lower than National Treasury's estimate for 2025. Do you think that's a pretty good estimate? And it's interesting that they've decided to still go ahead and cut rates despite the threats on the horizon.
Yes, and I think, the growth revisions really speak to what we've already seen from other forecasters. So if you look at the IMF forecast for April, for example, or in the World Economic Outlook for April, rather, you will see that global growth has also been downscaled from that front. When you look at the local expectations, we had already downgraded our forecast from 1.9% earlier in the year to 1.3% currently. So that has been the trajectory of, expectations for growth. Now, how this fits in with today's interest rate announcement is that with lower growth, it means that you have softer economic activity, less spending by households, potentially less investments by businesses. And so your domestic demand is also weaker. How that fits into the inflation profile is that it weakens, pricing power by different suppliers, producers in the economy. And as a result, you potentially get lower or less inflationary pressure. So that really fits in quite well on the macroeconomic landscape. And I think the softer demand and soft inflation trajectory really fits in line with what the interest rate decision was today.
Yeah. Liandra, what does this then mean for the consumer?
I mean, ultimately, for the most part, it means that there's less pressure on the consumer. So interest rates have been quite elevated for quite some time, since around 2023. There has been a lot of pressure on the consumer. So the cost of, credit cards, the cost of your bonds, the cost of your vehicles will be definitely much lower currently. And maybe it'll give them a bit more spending ability, which might support the economy a bit, although there is, some downside pressure in terms of the growth outcomes, mainly coming through from what's happening in the global economy right now.
We continue unpacking the repo rate decision with Liandra de Silva. She's a specialist economist at Nedbank. Koketso will be joining us a little bit later. Thank you very much, Liandra, for continuing to talk to us. So let's get into some of the details that the governor spoke about, around what's happening with the oil price, what we're seeing in terms of the rand exchange rate, which helped to support the decision of the Reserve Bank this time around in terms of that rate cut.
Ultimately, what has happened with oil prices is that because of the muted global outlook and the expectations in terms of global growth and demand from the world in general, it's been quite muted. And because of that, there's been a lot of downside pressure coming through in terms of oil prices. Another downward factor for oil prices has been the fact that there's been oversupply. So the US itself is a big producer of oil. It has been growing in terms of production of oil. And also OPEC has actually hiked oil production more recently, kind of responding to the slower growth environment and providing a bit more oil, hoping that it would at least provide some upside pressure in terms of prices. The second part of your question, please.
Yes, the second part of the question was really around the local currency. I mean, it's improved vastly.
Yes.
At the beginning of January, it was trading at 19.23 against the US dollar. Now it's hovering below 18, a massive improvement. It's firmer, but of course, it's a very volatile currency.
Yes, it is. I mean, as are most emerging market currencies. And the thing about the Rand right now, the Rand relative to the US dollar, is that the direction in which it has been taking is actually quite different to what normal economic fundamentals would show. So usually when there's a lot of global uncertainty, investors would run to safe sort of currencies, and the US dollar is one of those. But unfortunately, the US dollar has actually weakened quite a bit as a result of the uncertainty that the tariffs has brought on the US economy in terms of what is the outlook going to be for their inflation, what is the outlook going to be for their interest rates, as well as for their growth. And that has weighed quite notably, relative to what we would have seen previously or in normal economic dynamics when it comes to the strength or the power of the US dollar. So the fact that the US dollar has weakened to the point that it has actually been quite beneficial for the domestic currency. Another factor that has also supported the domestic currency is that I think also during the time that there were conversations around the tariffs, there were also conversations around, the GNU and possibilities of, there being disputes, and that was resolved, and that also provided some political stability, which also supported the Rand. So, the reason why we're seeing the Rand perform as well as it is different to what normal economics would say, considering the US dollar. But yes, it has been quite strong and resilient.
Yeah. Koketso, thank you very much for rejoining us. Koketso Mano, she's a senior economist at FNB. Thank you so much for continuing to speak with us. So the interesting thing was that the Reserve Bank governor didn't really spend too much time talking about the geopolitical issues or even Trump's trade tariffs, but those are still very much, an unknown factor, aren't they? Because he kind of equivocates about what he's going to do around the tariffs, and there's the suspension of the reciprocal tariffs. Yes, we've heard that a federal trade court in the United States actually said yesterday that those tariffs are illegal and that the US government has to go back to the drawing board and think of doing things in a legal manner. So there's a lot of uncertainty around what the US administration is going to do next, but clearly the intention is to raise tariffs against, the rest of the world. And that is an unknown factor, which could then raise inflation for all of us.
Yes, that is true. And I think it fits in line with, our opinion or our preview of today's interest rate announcement, where we wrote in our Economics Weekly that the MPC will have to choose between caution and fundamentals today, right? So we do know that uncertainties at the global level prevail. They are a bit less than what we had at the March MPC meeting. If you remember, ahead of that meeting, we were still waiting for the reciprocal tariffs to be announced. So that would have been something that really keeps the MPC on edge. But coming into this meeting, I think we kind of know how high the tariffs could be, but also that there is an intention to narrows the extent to which the MPC thinks these risks are profound.
All right, welcome back. We continue our conversation with Liandra De Silva, specialist economist at Nedbank, and Koketso Mano, senior economist at First National Bank, FNB. Of course, one of the issues that was discussed at length in the Q&A session that journalists seem to be more interested in was this whole idea of inflation targeting. The Reserve Bank Governor Lesitsha Kganyago having said on many occasions that he wants to bring the inflation target down. And he did speak at length about, you know, the pros of having a lower inflation target. Koketso, perhaps you can come in there and just give us your thoughts around, number one, do you agree with the Reserve Bank that having a lower inflation target is a good thing? And why do you think it would be important for the economy and South Africans?
I think maybe to answer that question, let's speak to the positives or the benefits of a lower inflation target. And I think this is what the MPC has been trying to stress for quite some time. A lower inflation target not only makes us more competitive as an investment destination, because now with lower inflation, you have lower inflation target, that is, you tend to have also lower and stable inflation, less volatility in the exchange rate. But also it means that when you look at real returns, so returns less inflation, those will also be supported. But I think what's also been important to think about is from this mandate of protecting the value of the rand, right? So what you see even over the longer term is that, you know, with less or lower stable inflation, it also allows for people to start, you know, deliberating around having a lower inflation environment. So that means the cost of producing, the cost of participating in the economy is also lower. It also means that for poorer households, you also have less inflation to contend with in the longer term. And most importantly, with lower inflation, it also means lower interest rates over the longer term. So if you think about it from the neutral interest rate that was spoken to during the Q&A as well. So when you think about what really balances the interest rates that really balance supply and demand in the economy, or neither is restrictive or accommodative in the economy, is also lower. So that means that there are all these benefits that you can look forward to. The issue here is what happens in the near term. So when we wrote our opinion piece, we said that maybe, you know, the shift to a low inflation target could make the Reserve Bank a little bit more conservative than they would be otherwise. But they seem to show in their analysis and in their modeling that, you know, by shifting to a low inflation target, you could actually start seeing, continue to see cuts coming through this year. And then over the medium term, you have much lower interest rates with a steady state or longer term interest rate of 5.5% rather. So that is very interesting. It seems that the MPC thinks that it can continue to reduce the restrictiveness of monetary policy on the economy and still achieve lower interest rates in the longer term.
Liandra, are you convinced by that argument? And also, just for our benefit and our understanding, who will ultimately announce the decision around what the inflation target is going to be? Will it be National Treasury or will it be the Reserve Bank?
Well, this is a decision that they obviously come to together. They reach the conclusion together. It's likely going to come from the SARB, but obviously it's a decision that would be backed up by the National Treasury. Who benefits? That was your question. Who ultimately benefits from low inflation?
Absolutely.
I think for the most part, the whole economy really does benefit. As Koketso highlighted, if interest rates are lower, then, you know, we are a lot more competitive. Businesses in South Africa are a lot more competitive. Investment, we might see a bit more investment coming into the country because of the competitiveness in terms of the pricing as well, which could be, which is actually going to be pro-growth. For the poorer parts, the poorer people within South Africa, it actually benefits them quite a lot. So they are quite impacted by the rise in prices, especially if you think of things such as food. So if there's a more stable or lower inflation, then it means that the prices of those particular goods, not only are they lower and possibly could increase at a more stable pace, which will definitely be supportive for them as well. So ultimately, everybody would benefit from lower inflation.
All right, we continue our discussion with economist Liandra De Silva, specialist economist at Nedbank, and Koketso Mano, senior economist at FNB. Thank you very much, ladies. So let's talk about really the most important issue when we talk about economics, and especially in the context of South Africa, and that is economic growth. Unfortunately, that's been revised downwards for this year to 1.2%, and the Reserve Bank sees that increasing somewhat to about 1.7% by the year 2027. But one of the good things that the Reserve Bank governor said or suggested was that the structural reform outlook looked good or optimistic. So perhaps I can start with you, Koketso, around that, because we really need economic growth for to address all of our socio-economic woes. So your thoughts around that?
Yes, the structural reform agenda is actually what embeds a lot of expectations around higher growth over the medium term. This is something that has been spoken to by the Reserve Bank, by Treasury, by the presidency, across different institutions in the government around how important the reform agenda is to not only pull in, investment and private sector participation, but also just make sure that service delivery is improved to the extent that businesses are better able to function within this economy. And that will be something that really supports economic activity, employment, and even the household sector. So what we see in the near term is that the household sector remains really the pillar of any soft growth or low-hanging fruit when it comes to growth. But over the medium term, it's important to have a more stronger foundation within the economy. We know that the reform agenda spans from electricity, logistics, water, and now when you look at Operation Vulindlela 2.0, that they also started to speak to the functioning of municipalities. So this is going to be very important to improving South Africa as an investment destination, reducing the cost of, producing or even just running a business in this economy, and pull in very important and much needed, especially coming out of the budget that we just came out of, much needed private sector investment and savings.
So, Liandra, I just want your thoughts around the whole issue of the reform agenda, how we're getting on, given the fact that there seems to be some positivity from the Reserve Bank around the outlook there.
I mean, overall, there are a lot of good things happening in terms of the reform agenda, the structural reform agenda. We're seeing a lot of work obviously being done, as has been highlighted, in terms of electricity, but there is a lot more that also needs to be done in terms of the water constraints that we are experiencing. When it comes to road and railway and the functioning of those particular parts of the economy, those are doing a lot better than they were, but there definitely is a lot that still needs to be done, a lot more progress, and which I think a lot of the work that is already being done right now will be beneficial. I think over the next few years we'll start to see the fruits thereof, because it will definitely come through in terms of the growth that we are seeing in the economy. I mean, ultimately we have to create an economy where businesses are able to operate without any issues in terms of electricity, without any constraints, because some way, somehow, that eventually filters through to different parts of the economy, with even the poorest of the poorest being affected by some of the structural issues within the economy.
Yeah. Koketso, are there any closing remarks you'd like to make that I haven't touched on?
I think just following up on the segment that we just had now, what is going to be important for South Africa as well going forward is that we're not fixing issues. We're not fixing railways. We're not fixing issues at Eskom and municipalities. In the longer term, Nompu, what we need is a long-term plan. And that's what we've seen from a lot of emerging markets. And that's going to be the key point of resilience, especially given the global backdrop that is not going to be so supportive. So how do we win key and important bilateral trade deals? We need to show that we are able to produce, we're able to compete, we're able to get goods to the ports at a cheaper rate. And I think that's where South Africa really needs to think. Beyond this fixing and the reform agenda, we really need to have a long-term plan to build in resilience in our outlook.
All right, ladies, we're going to leave it there, but thank you very much for your time and your insights. That was Liandra de Silva. She's a specialist economist at Nedbank, and Koketso Mano, a senior economist at FNB. Thank you so much, ladies, for giving us that insight there.